Let's go! While Bitcoin and the rest of the crypto markets have been ranging ever since the large dip at the beginning of the week, we may finally have some news that will be able to spark the beginning of the next push to new highs. And that is the fact that the US House of Representatives passed a $1.9 trillion stimulus bill yesterday. This bill has been in the progress for several weeks and has been revised multiple times, but now that the House has approved it, it could be only a little longer before it is signed into law and the money can start to be distributed. If you can remember all the way back in March of last year when the first stimulus bill was signed into law, it marked the beginning of the prolonged bull run that has been happening ever since then in both the cryptocurrency and legacy markets. In this video, I am going to be comparing the effect that the original stimulus bill had on the markets to the effect that the bill about to be signed into law could have now. Also, I will be explaining how even if none of the money from the stimulus package were spent on cryptocurrency, it could still cause Bitcoin to see another extended pump, as well as some other information fueling demand for Bitcoin among various types of investors. Before I get started with all of that, make sure to subscribe so you can stay up to date with all of the most important news regarding the crypto markets, as well as how I am actively trading and the best altcoin investment opportunities available. And by the way, also, before I move on to the details of the video, let me clarify the progress of the stimulus bill because I am sure not all of you are familiar with how the US government works. To be put into effect, the bill must be approved by three parties: the House of Representatives, the Senate, and the President. Friday afternoon, the House of Representatives approved a revised version of the stimulus bill. While it may seem like it is only a small step, it is actually usually the longest and most difficult because the members of the House do not like to pass things they do not believe will be approved by the Senate. There are also other smaller factors that comes into play, but the general belief currently is that the Senate and President will both approve the bill in the near future. With that out of the way, we can get into the interesting part: how this stimulus package could set Bitcoin back on its upward track towards the moon. To start off with, let's take a look at the effect the first stimulus package had on both the legacy markets and Bitcoin. I will be using the S&P 500 as a summary for the legacy markets in this video because it is made up of 500 of the biggest companies in the US. And as you all know, when I refer to traditional markets in my trading videos, I usually use the S&P 500s as well when you look at the charts. So, as you can see on the chart here, prior to the passing of the stimulus bill on March the 22nd, there was a very sharp decline in the markets. After it was passed, a V-shaped recovery occurred and the S&P has been trending strongly upwards ever since. And when there have been dips, the recoveries have been strong and fast. Now, on to the Bitcoin chart, we see the same V-shaped recovery, and while it did take longer for the strong uptrend to begin, once it did start, it has been even more dramatic than that of the S&P. Some of you may be wondering why a stimulus bill that provided businesses with the majority of the money had an effect on the price of Bitcoin. Let me explain. While some Bitcoin fans like it because of how it is decentralized, unlike the stock markets, it is still actually correlated fairly strongly with the S&P 500. This is due to the influence that institutional investors have on the price of Bitcoin. While the influx of institutional money has certainly played a major role in pushing Bitcoin up to its current price, that money comes with the side effect of their influence. Essentially, for many institutional investors, Bitcoin is known as a risk-on and/or speculative asset. This means that in times of uncertainty in the markets, they sell it, causing the price to dip. While this may seem like a bad thing, the correlation goes both ways. So when legacy markets are bullish and trending strongly upwards, Bitcoin generally does the same, and so that is when institutions tend to buy it. And this is also why, even if not a single dollar from the new stimulus bill were spent on Bitcoin or any other crypto, it is still bullish because the money is going to be used to bolster major US corporations, which will almost certainly cause legacy markets to pump. So let's take a look at the differences between the original stimulus and the current one. The first was worth a total of $2.2 trillion and included $2,000 for individuals who met certain qualifications. This current bill is worth a total of $1.9 trillion and includes a $1,400 check for individuals. Both bills have included very large amounts of money dedicated to supporting major corporations, especially those most impacted by the coronavirus. They both, of course, also include money to provide to schools, hospitals, and other services, but the individual checks and business money, they are what is the most important things to pump the legacy and crypto markets. This effect could begin to take place as soon as the bill is officially signed into law, as that is what happened back in March. This is because even before the money is actually distributed, investors will begin buying in anticipation of the imminent uptrend. This time, however, there are some key differences in the current financial environment. Back in March, people expected there to be some kind of money printing by the Federal Reserve. Now, however, we have seen the true extent of how much money the Fed is willing to print and have heard them state that they are willing to print even more to prop up the economy. Because of this, hedges against inflation are more important and highly desired than perhaps ever before in the history of the US dollar. As we all know, Bitcoin has proven itself as perhaps the best store of value available, and while we have known this for a while, institutions are now beginning to accept it as a fact as well. Because of the fact that another nearly $2 trillion will be printed to fund this new bill, wealthy individuals, institutions, and pretty much anyone else looking to protect the value of their assets will be looking to purchase some Bitcoin. An interesting note regarding the rapid inflation of the US dollar is that the Federal Reserve actually has discontinued the most popular measure of the US dollar supply, the M2 money stock. They did replace it with a new different measure of the US dollar supply, but there have been many suspicions raised about the fact that the M2 measurement was discontinued at the time when so many people were starting to pay attention to the money printing being performed by the Federal Reserve. While I have already explained why it does not matter whether or not anyone buys Bitcoin with their stimulus money, the reality is that there is a high probability that people will be experimenting with investing in Bitcoin or other cryptocurrencies with their stimulus checks. The week after the first check was distributed, back after the first bill, there was a 90% increase in the amount of people who make between $35,000 and $75,000 trading stocks. This goes to show that for many people, the extra money represented an opportunity to try investing. Luckily, those people have now been able to learn more about investing and track the markets for around 10 or 11 months by now. This means that they probably have a much better idea of current market conditions than they did back then, and it's almost certain that they have been paying attention to the markets and they are hearing a lot about Bitcoin. This could cause more of those stimulus checks to flow into crypto this time around rather than stocks, as they are arriving at a time when Bitcoin is in the spotlight and retail stock trading has a bit of a negative sentiment due to the events of the brokerages such as Robinhood controlling what retail investors can and cannot do, and this is what crypto solves. I hope you enjoyed today's video and learned something about how the crypto and the traditional markets are connected. While it can be easy to focus on crypto alone, it can be very beneficial to spend just a little time staying up to date with what is going on in the stock markets as well, as it can give you an extra edge in your investments. Thank you for watching this video. If you would like me to post more of these types of videos, let me know down in the comment section. Now, let's jump into the video I released a couple of hours ago talking about trading. As you know, I do trading on my channel as well, and there's a big opportunity right now in the chart. So let's jump into that video. It's popping up in the middle of this video right now, and I will see you right there.